The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is Dave Nadig, CIO and Director of Research at ETF Trends. Hello there, Dave. Thanks for joining us. So just taking a look at the markets, it's great to have you. It's been a bit of a lackluster month in the crypto markets. I'm just wondering, where do you see the opportunity and what do you see the trajectory going forward?
Yeah, I mean, it's sort of interesting. I spend most of my time in the traditional finance markets, and so we consider a 2 or 3% day a big day. In crypto markets, that's considered boring. So it is still much more interesting what's going on in crypto than what's going on in the traditional finance space. The institutional demand is absolutely still there, right? Depending on what kind of metrics you look at, there's really very little question that institutional demand is still there. It's still coming. It's not all just going into venture capital like we were talking about. There's increased use as balance sheet asset. Obviously, that's a well-known story. I think a lot of the news this morning about what came out of Russia with the central bank possibly looking there to ban cryptocurrencies. We've seen similar, moves from China in terms of them restricting that. I think it creates a really interesting dichotomy with what's going on in the more traditional sort of democratic world we would think of, Europe and the United States. Where are we going to come down on that? I'm actually fairly bullish. I think that being on the other side of this from China and Russia is actually a pretty great place for U.S. regulators to start from. So while I'm not bullish on immediate relief, say, for a Bitcoin ETF this year, I think it's bullish for long-term crypto regulation to be rational.
All right. Taking a look at the GBTC discount, the Grayscale Bitcoin Trust discount, it's at a record low. Seems analysts see the chances of it being converted to a spot ETF anytime soon are also very low. It's now at 26.5%. I wonder, what are your thoughts?
Yeah, I'm very bearish on the idea that GBTC is somehow going to get a pass from regulators and get quickly approved to become an ETF. They do have an outstanding lawsuit. They're trying to invoke the Administrative Protection Act and claim that somehow their shareholders are being unfairly treated compared to, say, the shareholders of BITO, the Bitcoin Futures ETF, which launched back in November. I don't think that lawsuit is going to hold much water, nor do I think that the first move that the SEC would make would be approving the conversion of this versus approving one of the many, many much cleaner filings we've had for just a very simple Bitcoin, spot Bitcoin ETF. So I think it's very unlikely we're seeing a conversion in this calendar year. I actually think it's quite unlikely we're going to see a conversion in the next couple of years, barring some sort of massive, well-telegraphed regulatory shift. So this discount at 26% doesn't have any reason to go away. And I think that's the part that people often miss here. There's nothing structurally that will make this discount go away. The Bitcoin that are in GBTC have no regulatory way to get out. There is no way for that Bitcoin to leave those funds, which means the liquidity is entirely up to the market. And when we're in a market right now where more people want to sell than buy, that's why we're at 40,000, not 60,000. It doesn't surprise me that we're seeing a trade to a huge discount.
Yeah, Dave, is it that people really, that there are more sellers than buyers, so to speak, or there just aren't enough buyers, period? In other words, has the quantity of buyers fallen off because, for instance, the clampdown in China specifically, and we've kind of lost that huge market that was going in through the OTC desks, not really happening as much anymore, and that's sort of drying up the market, and it's not overcoming it's not being absorbed by the, let's say, institutional interest that you're describing earlier. I mean, how long can this persist? Are the institutions just buying into a void here?
Well, I mean, they're buying into a void, I would say, is a bit aggressive, right? With the pullback down here to 40, 45 seems very rational to me, right? This market ran very hot very quickly. Some level of profit taking is absolutely to be expected. When we look at something like GBTC as a bit of a canary in the coal mine for that boundary between traditional finance and sort of true crypto traders, the fact that it's trading as a discount tells us that demand from traditional finance players is lower than it has been in the past. At the same time, it's never been easier for those institutions to get access through other vehicles, or for even retail investors to get access through BITO or any of the funds that are now putting Bitcoin futures directly into a 40 Act package. So I think the buyers are there. I think this was a very natural pullback that we've seen, sort of natural profit taking. I think you're going to see a lot of people use this as entry points for building those stakes long term.
We talked about just now the approval of an ETF happening anytime soon, not happening anytime soon. Do you think Gensler's comments about wanting to regulate wanting to regulate the crypto exchanges has a lot to do with it? In other words, he's not going to necessarily give his blessing on an ETF until he gets control of the way in which the spot markets are conducted?
Yeah, I mean, they've been very consistent that they're concerned about manipulation in the spot market and to some extent even in the futures market when they were first regulating that. So that's very consistent. I wouldn't expect them to just all of a sudden wake up one day and realize that they've been wrong about these things. They're going to continue to fight for more surveillance on the underlying crypto exchanges. It doesn't mean that they're going to try to regulate every crypto exchange in the world. It just means that they're going to put a stake in the ground on the US side of things. Stablecoins, I think, is going to be absolutely where we see the first action there. I think it's almost a given that stablecoins will become regulated like money market funds through some sort of hybrid structure. I think that's probably in this year we're going to start seeing those types of proposals. So we are going to see movement, but we're just not going to see it at the front end of the Bitcoin ETF pipeline. We're going to see it at the foundational level, at the exchanges, at the level of stablecoins. That's, I think, where we're going to see those first moves.
And when you say the stable coins, now you're just talking about asset-backed stable coins. Do you think that they'll have any ability to regulate the algorithmic stable coins, which don't have assets backing them? Are they going to make that kind of distinction? Because basically they really can't do anything to stop an algorithmic stable coin from happening.
Well, they can't do anything to stop anything happening outside the United States. And that's one of the really challenging things here is the SEC can only control the commerce that's happening in our borders with our citizens. And so they can't, if somebody launches an algorithmic stablecoin in the ether, as it were, there's no place for them to go and regulate that. When we get to something that's asset backed, now there's something that you can talk to. There's a pool of assets that you can regulate.
Excuse me. Are there any other regulatory actions in the United States that you're looking at this year that could have a very negative impact on them?
Yeah, okay. I mean, I think there'll be some interesting stuff around taxation. I think this is going to be a really interesting tax year for a lot of people, particularly folks who are doing things in the token market or NFTs. There's a lot of discussion that's going to happen around things like wash sale treatment. I would expect to see more guidance from the IRS in this calendar year, probably covering this calendar year as well, meaning for filing next year. I think that's almost inevitable. There's got to at least be some additional guidance given the number of players in that space. But other than that, I think the focus will be on a crypto ETF, a Bitcoin or ETH ETF itself. The next deadline there is mid-April. We're getting another round of rejections I'm expecting on 19B4 filings, which is what exchanges have to file with the SEC. So really, I don't see much progress here, certainly through the middle of the summer.